Hey guys, welcome to Stock Talk with Mike. It's been a while since I talked about Jumia Technologies, and I want to talk about what the heck is going on, why we've seen it sell off nearly 75% off their all-time highs near the back half of 2020, where it was almost $70 a share. Now we're seeing it trade at $17 a share. So we've seen a massive sell-off in Jumia. I want to talk about if anything fundamental, underlying has changed about the company to warrant such a sell-off, or if it had any business being as high as it was in the first place. And I also want to cover my position in Jumia, what I've done. Have I sold out of my position? Have I bought more? So I'm going to cover that in this video and what I think Jumia's prospects are moving forward. So I think you're going to like this video. If you haven't already, please consider subscribing and really help out my channel. It'd be great also if you hit the like button. Yeah, so Jumia had an okay day today, but it hasn't been a very good run for Jumia. This is looking at the past 6 months. You can see generally it's just down, down, down. There's a few blips in there, a little bit of recovery, and it just keeps getting beaten down, more and more selling. Clearly more sellers than buyers. Look at the year to date. Beginning of the year, it started to make a little bit of a climb there, doing pretty well. Approaching nearly $70 a share before having this sell-off, beginning the sell-off, beginning of the year when we saw a lot of the risk stocks, SPACs, high growth stocks sell off hard, but a lot of those companies have stabilized, but some of the SPACs and more speculative names have continued to sell off, and we've definitely seen that in Jumia. Take a little further look out at Jumia. You can see that they had such a massive rise in 2020. As we go even further back here, they were trading as low as around close to $250 or even below that per share back in early 2020, in the spring of 2020. So you got to keep in mind also that they just went on an absolute massive run, an unsustainable run really, from under $2.50 a share to almost $70 a share in the matter of several months. So we're talking well over 1,000% returns. One of the best performers of 2020 on that massive run. Definitely coming off suppressed levels though there in early 2020 when it traded down to $250 or so a share. That was a lot of that sell-off to that level was from a bit of a hit piece that was put on out from Citron Research where they put on a short position on Jumia and had a bear case laid out, and then they later went complete 360 and became bullish on the company, and that was the turnaround that started the meteoric rise in 2020 for Jumia. When they originally came public, they were around that $25 a share mark, so we're even below those levels now from the beginning of 2019. So definitely seen quite the sell-off. So for me, in my position at Jumia, take a look here. I hold it in my spec portfolio. So I like to manage my positions in different portfolios because it reminds me of why I bought it in the first place and also how I'm going to work my position. So more speculative positions, I'm not going to let become too large in my portfolio. So I first bought Jumia at $4.05 a share back in February 25th of 2020. I have 60 of those shares left. I actually originally bought 200 shares. But the only reason why I have 60 here at that price is because as we saw that big rise, I saw Jumia become overweight in my portfolio to where it was one of my larger positions. And I had to keep trimming it back in the back half of 2020 as I didn't want a highly speculative, volatile name to be by far the largest position of my portfolio, which if I didn't sell any, it by far would have been. And I'm glad I did because this is an example of a very volatile stock where we've seen buying opportunities. And I treat capital that I've gained in the market the same as I would new capital. If I've made a lot of money in a stock, I think to myself, would I buy it to these levels? I don't like to totally trade in and out of positions, but I like to manage my position size based on the risk reward for that particular stock. And being a speculative name, when we saw a big run like that, I actually started selling. Given that I bought it at $4.05 a share, I actually started selling it in the 30s. And then I saw it keep going up, and I was trimming even more and more. And I even sold some in the 40s, 50s, and even up into the 60s. Not quite at the high, but at the low 60s somewhere, I sold some as well. And then I started buying back. I always start buying back methodical at like about 20% sell-off increments from there. So in March 24th of 2021, I saw it get down to about $35 a share, and I bought 30 shares at $35.45 a share. I bought some of those initial shares back. So that strategy's worked well for me, right? I actually was able to save some loss there from taking some trimmings and buying back in at a lower price. And then on May 4th, it continued to sink down. I bought 31 more shares at $26.99 a share. So you can see a bit of a theme here. I'm buying as it's going down. I'm actually waiting. I'm not really aggressively buying here. I've been waiting for quite large increment sell-offs to buy back. And that's because it is a highly volatile name. And I think investors are having a hard time putting an appropriate price on this stock. It is a very interesting company to evaluate. And then in July of 2021, I bought 50 more shares at $21.42. That's kind of was my line in the sand, thinking I'm going to need to see a significant drop by buy more. And we even saw the high 16s lately, and I didn't pull the trigger. But man, if we do see single digits on this stock, it could be really interesting, and you might see me do some aggressive buying, maybe even considering doubling my position size. But I definitely want to get back up to that 200 shares. I think I'm just shy of that still. So I'd probably buy again near the low double digits. I'd probably buy back up to my 200 shares, and then we see where it goes from there. So Jumia just recently reported earnings, and they actually were pretty good. I think Jumia is in a better position now than they probably were in the back half of 2020 when they went on their meteoric rise. So it's kind of interesting that I think you have to remember not to fall in love with the price action or get too concerned with the price action on the downside either, as to how you evaluate and what you think of a company. So there was a lot of euphoria around Jumia when it was going up, but that was actually a time maybe to be a little bit concerned. Like, that was not a sustainable rise when you see a company go over up 1,000% in a year, and they hadn't really made huge inroads as far as massive revenue growth or earnings growth during that time. They did cut some spending, streamline their business a little bit, but definitely it wasn't like there was massive earnings beat or anything like that to warrant that kind of massive rise, right? It was kind of a bit of a stagnant business as they work out some kinks. I really think Jumia is a long-term play. They do have lots of underlying fundamental challenging components of their business that they do need to work out. And they've made some massive strides in that regard, even as far as delivery, taking on the logistics component themselves, becoming lean and mean, focusing on third-party sellers, trimming a lot of the huge bleeding loss leaders as far as first-party items they were selling previously. But yeah, they still have a long way to go. But they actually, in the last quarter, made some good inroads. Revenue was up 4.6%. So it was nice seeing it actually heading back in the up direction, as we were seeing a negative revenue growth previously, as they were trimming their first-party revenue, or first-party items they were selling on their platform to sell more third-party items. And that showed up in the bottom line, or the top line revenue, as a decrease in revenue. Because remember, for these third-party items, they only record the net revenue that they receive for commission for that item. Whereas for first party, when they're selling a product, they record the entire sale, obviously, as revenue. So I think because of that metric, that change in dynamic between first party and third party, I think it's best to really focus on the gross profit line for Jumia. They'll tell a lot better story of the trajectory of the business. And their gross profit was up slightly from previous quarter, 25.6 million to 26.8 million. So a 4.4% increase. Again, just a modest increase. And they had been making some good improvements in their bottom line as far as operating loss, but it was actually slightly more negative on this quarter. Increased loss of 24.7% to 51.6 million. So again, Jumia, I think, really is a long-term outlook type of investment. Africa is growing incredibly quickly, where we have increased internet adoption, increased wireless adoption. Jumia Pay is making up a third of their revenue now, and that is a really exciting component of their business, their digital wallet component of their business. And their e-commerce, I think it's going to take time. It's going to take time to really dial it in. But I think it's a really interesting play, and being the leader in Africa, in I think 10 or 11 countries in Africa, I really have faith in the management to work out these kinks over the long term. But nothing has changed, in my opinion, over the last several months to warrant this sell-off, other than general market sentiment around more of these high-risk stocks that haven't proven themselves yet, don't have strong earnings or any earnings, that are these long-term plays, as we've seen with SPACs. Other companies are maybe pre-revenue companies. They've all sold off so hard, and it's more just a general market sentiment that more risk adverse, as people took more flight to high to value safety type plays, right? Dividend stocks, etc. Beaten down value, all that. So I think it's really about market sentiment, and those always provide really interesting investment times. But for me, I think Jumia is actually more attractive as a business now, seeing these numbers come in, than it was when it was such a high flyer. It was definitely an exciting time, and you know, I'm glad I was able to lock into some gains. Hopefully you did too if you've been an investor in Jumia. But I think there's some more opportunity being made here with some of the lower prices we've seen in Jumia in recent weeks. How low is it going to go? I'm not sure, but let's look a little bit at their valuation. It's kind of interesting because if we look down here at their balance sheets, where is it here? Let's look at their assets and their liabilities. So they took advantage. They were smart and took advantage of the favorable market conditions last year and raised some money, right? They diluted shareholders a little bit and raised some cash. So they're actually sitting on a good pile of cash. In 2020, so December 31st, 2020, they were sitting on $374 million in cash, basically, cash and cash equivalents. And as of June 30th, 2021, they're sitting on $638 million cash and cash equivalent. So they've nearly doubled up their cash. And then looking at their liabilities, their current liabilities are only $147 million. So really good net cash balance position there. So if we look here at their market cap, currently around a $1.7 billion. But if you back out that net cash of about 600 million or more, they have an enterprise value of under $1 billion. So they're currently trading around, looking at their market cap again, around 10 times sales, and that's looking more attractive now. But when you think, again, they're sitting on 600 million cash, so you got to take that off the value of the company, right? Because if they sold off that company today, or if you bought it, you get to take that cash as well. So really, the value of the underlying business, their enterprise value, only around 904 million here. They're trading at about 6 times enterprise value. So it's really interesting that that valuation is really coming in at this point. And I like what I see there. 10 times sales, but really that's when you back out the cash, you're really at about 6 times. So valuation is looking a lot more attractive at these levels. And again, if we saw it drop even harder to single digits, which I could see that happening, if the market still doesn't have an appetite for these type of stocks, it's definitely possible. Let's see, how's volume doing here? So yeah, average volume around 4 million shares. So not too bad. We're seeing a little bit of an increase lately, the last 10 days. So that's good that we're seeing an increased volume. But I just don't think there's that institutional buying here right now. You look at their 13F filings. Against these are hedge funds holding Jumia. So this is as of Q2. So it's hard to say what they're doing right now, but basically last quarter, Jumia was in no top 10 positions in any funds, where in the previous quarter, Q1, they were in 2. Only 183 funds holding, that's down from 187. Only 26% institutional ownership, that's down from 28. And there's only 46 new positions, 69 increased positions, and almost the same number of closed and reduced positions. So, a bit of a downward trajectory in institutional ownership. And I suspect based on the price action we've seen as of late, we're going to see similar reporting for Q3. But I expect this switch to be flipped. And I don't even know if the catalyst is honestly going to be Jumia. I'm okay with the underlying fundamentals of the company improving while the stock just kind of sits in this like doghouse state for a while. That's actually probably a good thing. It allows you to accumulate some shares back. I'm happy with how I'm building up the number of shares slowly. Not getting too aggressive in my buying. Like some companies, I see a 10% sell-off, I'm adding aggressively. But this one, I don't know where that bottom is going to be, but I want to have a decent position size because I do suspect we're going to see much higher levels in the future. I just don't know how far out that's going to be and where it's going to bottom. I do not think we're going to get to those crazy levels we saw during the Citron hit piece of 250 a share. I don't see that happening. But I could see a little more downward pressure. I don't think this is going to hit single digits, but you never know. And if it does, I think I would load up pretty heavily, as I haven't seen any big shifts in the fundamentals of the company to the negative. I've only seen them make inroads towards profitability, and now even seeing a slight increase in revenues are definitely headed in the right direction. So I want to give this time to play out. That's why I bought it in the first place. I didn't buy this for some kind of immediate shift in the company that was going to make it undervalued. I bought this as seeing as a company that I see growing over time, that developing their network within Africa, building out the infrastructure, and becoming a large, dominant e-commerce player in Africa as Africa comes online and adopts e-commerce, and as they adopt digital wallets and they expand into other countries within Africa. I see Jumia being a leader there. So that's what I'm in it for. And nothing has changed from that other than it is on sale right now. So I'm still holding my Jumia, no plans to sell. Looking for opportunities to buy here and there. I didn't sell all my position when it was expensive, relatively, in the high $60 a share. So I certainly wouldn't be selling at these depressed levels. So anyway, I still really like Jumia. I still think its future looks bright. Steve Weiss on CNBC, who he mentions Jumia a lot as a great spec and really believes in the company long term. And he was actually recently sold out of his position and really just stated that the company's doing great, but that just the market doesn't have an appetite for these kind of companies right now. And to me, that sounds exactly like a company I want to be invested in. And when I want to invest is when the market isn't really interested, but the company is performing well at the same time. And that's where those great buying opportunities are created. So again, Jumia is a highly speculative play, weighted appropriate in your portfolio. It could go to zero. It could go totally bust. I like the strategies of management. I like the direction they're heading, and I believe in the company long term. So anyways, that's about all I got for you today. Thank you so much for watching, and happy investing.